Hello and welcome to Markets We are Deven Choksey, the daily market podcast where we decode the Indian financial markets. This morning, the GIFT Nifty is trading lower, indicating a start in the red for Indian markets. The Asian markets are largely higher today, where Kospi has gained the most. It is up over 1%. Talking about the US futures are trading higher after a close with minor cuts for cash market on Monday. US markets ended lower, where Dow Jones and S&P did fall 0.4% each, led by tech sector. AI-linked stocks are witnessing rally, where Nvidia has hit near record high levels in aftermarket hours. The Boeing has risen around 1.2% following an announcement with respect to management change. US Aviation Department is increasing oversight drags. United Airlines stock did fall 5%. The US 10-year yield remained around 4.3% ahead of key economic data. Crude has risen on an expectation of output cut by Russia, where Brent is trading at $87 a barrel. And clearly, as we see, there is a lot of momentum and volatility seen in bullion markets as well. So this is how the trade setup for global markets look like this morning. Let us now take a look at the trade setup for today. Of course, it's a truncated week, and on the Tuesday, we are going to start with the trading session, it being a market holiday yesterday. But though the market rebounded nearly 400 points from the low of last week, it is expected to be range-bound and volatile in the coming truncated week as well. Adding the key hurdle on the higher side is expected to be 22,300, and the crucial support is likely to be 21,700 on the Nifty 50. The breaking of either side of the range can give firm direction to the market, while the monthly F&O expiry-led volatility is also likely to be seen. In the last trading session, which was on 22nd of March, the BSE Sensex climbed around 191 points to close at 72,832, while the Nifty 50 gained around 85 points to close at around 22,097 and formed a bullish candlestick pattern on the daily charts and above average volumes, while on the weekly scale. Of course, as we see, the index formed a small bullish candle with the lower low shadow, which resembles hammer kind of pattern. The index rose 0.3% during the week. The recent pullback from the lows of 21,710 appears to be overlapping, and clearly, hence, as we see, that these are the volatility signals which one needs to clearly understand, and understand as well that there's a lot of cautiousness which one needs to practice, as the market is quite volatile in these recent times. So considering all of these, we conclude that it is a retracement of the fall and not the beginning of the new leg of up move. Nifty is likely to consolidate in the range of 22,300 to 21,700 in the absence of any near-term triggers ahead of the quarterly results announcement. Nifty now stands around 21,700, as we clearly see. The support, one can say, stands around 21,700, and the resistance is very strongly placed around 22,300. Until they breach either side of the range, the same kind of volatility might continue in Nifty particularly. Volatility dropped for the third consecutive session, making the bulls more comfortable. India VIX, the fear index, declined 2.34% to 12.22 from 12.51 levels, while the Nifty mid-cap 100 and small-cap 100 indices gained 0.6% each. Considering all of these, we now take a look at the key support and resistance levels for both Nifty and Bank Nifty. Nifty 50 may face resistance at 22,124, followed by 22,237 and 22,351 levels. On the lower side, the index may take immediate support at 21,940, followed by 21,870 and 21,756. For Bank Nifty, in the last trading session on 22nd of March, as we clearly did see that there was absolutely, it was kind of forming a bullish candlestick pattern on the daily charts after several days of tug of war between bulls and bears, as the index gained 179 points to close at 46,864. A 20-day simple moving average of 47,000 could be the immediate trigger level. Above 47,000, it could rally till 47,250 to 47,500. On the flip side, below 46,500 or a 50-day SMA uptrend would be vulnerable. According to the current scenario, the Bank Nifty index may see resistance at 46,901, followed by 47,053 and 47,209. On the lower side, it is expected to take support at 46,646, followed by 46,550 and 46,394. So these are all the important support and resistance levels for both Nifty and Bank Nifty. We now take a look at the stock-specific news, and Of course, as we see, we start with a lot of investor meetings during this week. Of course, it being a smaller week, but still, there are a few triggers and stocks in news which one needs to consider. The first stock in news would be Reliance Industries for today, as the billionaire Mukesh Ambani-owned company has received a board approval for the acquisition of 100% equity shares of MSKVY 19th solar SPV and MSKVY 22nd solar SPV from MSEB Solar Agro Power. The acquisition move is in line with the terms of the tender awarded to Reliance for setting up of aggregate solar capacity of 128 megawatts spread across various locations in Maharashtra under the Mukhyamantri Saur Krishi Vahini Yojana 2.0. So this is one development which has happened which will keep Reliance Industries in focus. ICICI Securities is another stock in focus, as the Securities and Exchange Board of India has issued an administrative warning to ICICI Securities after the inspection of books and records for the merchant banking activities of the company conducted in December 2023. Hinduja Global Solutions is another stock we need to consider, as the IT services management company has entered into an agreement to sell its optical fiber assets to Indus Media and Communication, a subsidiary of the company, for 208 crore. Lupin is another stock in focus, as the company plans to carve out its trade generics business in India as a going concern on a slump sale basis to subsidiary Lupin Life Sciences for 100 to 120 crore. And last but not the least, keep an eye on Dr. Reddy's Laboratory, as the pharma major has entered into a license agreement with US-based biopharmaceutical company Pharmaz Inc. to commercialize Cethaquin in India. Cethaquin, developed by Pharmaz, is a resistive agent indicator for the treatment of hypovolemic shock. So, particularly a product which keeps Dr. Reddy's in focus. These are all the stocks in news for the trading session today. Let's take a look at the FIs and DIs data. The foreign institutional investors net sold shares worth Rs 3,310 crore, while the domestic institutional investors bought shares worth Rs 3,765 crore on the 22nd of March. So all in all, this is how the trade setup for today's trading session looks like. As we clearly see, it's a small week, a truncated one. One needs to be very much watchful about the volatility which we have witnessed in the last few sessions. And as we clearly say always, no matter whatever the market condition are, research is the backbone of successful portfolio creation. Research is something which will take you to places and to the right places. Wealth creation is an art that we understand. We at Deven Choksey have our exclusive research services which are powerful and successful. To avail our exclusive research services, we invite you to join us. Just click on the link below and you're done. Fill in your basic details and our team will reach out to you. So don't wait any further and embark on a wealth building adventure together. Thank you and have a nice day.